could Tesla hit $1,337 per share? Let's talk. Whoa, Elon Musk just announced that soon that you might be able to buy an Optimus robot and a CyberCab bundle, almost like a bundle coupon, for frankly less than $60,000. Now that's actually pretty exciting, especially since I just bought a Cybertruck. It was the Cyber Beast, which cost me about $115,000, which means I could have almost bought 2 Optimus robots and 2 CyberCabs. But then again, maybe the joke's on me. Anyway, hey everyone, me Kevin here. I want to just jump right into it. Let's figure out what does this mean for the freaking stock, because this could be really, really exciting. Now, I haven't done all of this, and I want to run some of this with you so we can see it together. After we run some numbers, what I want to do is talk about why I think robotics are going to be huge in the next 5 years, and they have a lot to do with a recession. Stay tuned. There's good news and bad news in that. And I'll give you a little update on the Cybertruck. All right, ready? Here we go. So first of all, let's just throw the bundle in here, and let's quickly take a look at Elon's tweet or post on X. It is the following. It is a quote tweet of somebody saying, "We will be able to buy both of these products for around $60,000. Love the look of it, by the way. Really attractive. Elon replies, "We need to reach 1 million production units per year, basically, first, but yes, long term." Okay, so acknowledges the possibility, but yes, we've got a ways to go. So what is this worth to us when this happens? Let's just put a placeholder in. Let's just say this happens by 2030. Let's go 60,000 for the bundle, right? And we're gonna go with 1 million of these bundles. Well, I'm calling them bundles, all right? $60,000 bundles. I just deleted everything else, okay? I'm not putting any, actual Robo taxi revenues in here or whatever. I'm just assuming these are sold. These are the sold units. All right, so for the sold units, we're gonna run them at a 20% margin. And I'll throw some leases in here as well, just to get some lease accounting. And we'll throw our margin in there. We'll throw our services in here, whatever. All right, fine. So I put 10% in for OPEX. I put a tax rate in here of about 19%. That gives us about $5.4 billion in net income. This should be pretty logical, because if you have revenue of about $60 billion, 60,000 times 1,000, you got revenues of about 66, 80% margin, minus some other costs for leases, servicings, for operating expenses, actually running the business, whatever it might be. Note I do put some services revenue in here as well, though most of that is spent. You end up with somewhere around expenses of almost $60 billion, which again brings you down to a profit of roughly 11%. Okay, so they make 60 billies, Kevin, got it. They bring 6.6 to the bottom line, then they pay some taxes. Fantastic. What does it mean for the stock? Well, just divide it by the number of shares outstanding, which will then give you $1.58 of earnings per share, which if you multiply that by about a 50 PE ratio, which is about a 1.67 PEG ratio at a 30% growth rate for Tesla, which they would probably be at if they were selling Optimus and robotaxis, you'd be at about 80 bucks. 80 bucks a share, which is pretty cool. Ignore that little note there for Uber. But that's not the fun part. Let's now say they were able to pull off an Uber. Okay, first what we're going to do is, how many Uber drivers are there? Okay, they have 7.8 million Uber drivers around, your active Uber drivers, which is crazy. 7.8 million, that's a lot. Now, obviously, a Robo cab is going to be able to drive, say, 4 times as long as maybe even 5 times as long as the average hours that an Uber driver drives. Let's actually Google that. Average hours an Uber driver works. Let's just see. Okay, they usually work about 12 to 19 hours a week. Well, that's 35. Okay, well, that's more of what they're trying to do, is get a rough average there. 91% of Uber drivers work less than 40 hours per week. However, everything would vary. All right, let's say the average Uber driver works 20 hours per week. All right, well, a robotaxi is going to have uptime of 90% of 24 hours a day times 7 of about 150 hours a week, which divided by 20, it's worth about, call it 7. I'm going to round down to be conservative. A robotaxi is worth about 7 Uber drivers. So let's just go extreme here for a moment. Let's say we can replace all of those 7 million Uber drivers by keeping 1 million robotaxi and Optimus bundles for ourselves. You know, the Optimus we could license out to factories or whatever, and the robocabs we can Uber out, basically. Let's then just take their quarterly net income at Uber of $2.6 billion and annualize it. So 2612 times 4 is about $10 billion of potential net. That's already net. I don't even need to put operating expenses in there or anything because we've, quite frankly, already done that. So this is just an extra, $10 billion of net. All right, let's go on down to the net section here. And all we're going to do is we're going to add to this $10 billion. I'll throw it in right here. 10 million, 10 billion. Oops. Remember, spreadsheets do not like commas, but I write the commas in just to make sure I have enough zeros and then delete the commas. There you go. If you add that $10 billion of revenue in because you've kept 1 million cybercabs, which drive 7 times as much as robotaxis, you could be looking at $3.96 of earnings alone from keeping 1 million, selling 1 million bundles and then keeping 1 million cybercabs for yourself. You know, this might take an extra year or two, but look at the value of this. $200. That alone is worth $200. So it goes to show you them trying to replace an Uber makes a lot of money, but the even more insanely remarkable part, which I'm just not even going to go this insane, is Uber's just providing the software. You're actually also replacing the human labor. Look at this for a moment. Revenues at Uber, $11 billion. The costs of revenue, a lot of that is the employee, $6.7 billion. Even if you could capture half of that back because of price compression in the market or whatever, you're taking in another $3 billion potentially in quarterly income times 4. That's another $12 billion. You know, there are a lot of risks to this, but if I now add in another $12 billion to that number, all of a sudden I get to, look at this, on just selling 1 million robotaxis and Optimus robots, I'm at about $80 a share. However, if I can replace Uber with 1/7 of the vehicles and I just have 1 million robotaxis on the road, I go up to about $200 per share, as well as selling 1 million bundles. If I can now capture 50% of what the workers were charging for my robot, I go up another $166 to $364 per share. Folks, that's $364 per share on top of the cars Tesla sells today, the FSD, the energy revenue, whatever else. This is just Optimus and Robotaxi. So add on top of that the other $300 or whatever, you have this potential longer term, you know, double if Tesla pulls this off, or even much more than that. You know, I could see people saying, you know, Kevin, why so bearish? Now, obviously, there are some limits to this, right? Okay, let's now talk about some of the limits, because we don't want to be pure one-directional here, okay? Number one, recession on robotics, okay? We got to talk about that. Then we got to talk about price compression in robotaxi. Is volume better than service provider, right? Like, with these Uber numbers, I'll just hit that one first really quickly. With Uber numbers, you want to be Uber and the owner of the vehicles. Like, the numbers are good. The margins are great. the margins are great just being the app, but they're amazing if you can partner in the human income replacement. Mostly because you only need one RoboCab for every, say, 7 human Uber drivers. Because these cars are driving 7 times as much as the average Uber driver driving, 20 hours a week. Okay, so this is great. The problem is price compression could kill this. So if price compression reduces how much money an Uber can make, then it reduces how much money Tesla can make because there's competition. Speed of service will drive people to whatever app is fastest, basically, outside of the Tesla loyalist community, which does mean there is huge value in just selling the pickaxe, right? Making the RoboCab is like making the pickaxe. You're not going gold mining. You're just conservatively making the pickaxe. All right? Well, let's go back to our spreadsheet for a moment, and let's just remove all this optimism that we're going to keep all of these units ourselves, right? So if I remove that, I'm back to $80. And let's say this becomes so popular that long term, we're actually selling, 5 million of these vehicles and Optimus bundles per year. Which is totally possible, especially if the technology is really killing it. That alone is worth $400 on top of what the company's currently doing with energy or, with people who still want to drive their own cars for whatever reason. That's a whole nother business, right? Anyway, that's bullish. But what about this recession talk? And then we got to talk Kevin CT. So interestingly, a recession on robotics will not cause a recession. Like robotics won't. But robotics plus AI, in my opinion, will prolong any recession. And the reason for that is I think what you're going to find is either soft landing or recession. Layoffs will happen. New hiring, even in the face of stimulus. So in other words, even if the government's printing money, which they will again, they're lowering rates, whatever, will be slow. So in other words, new hiring is, in my opinion, likely to slow down because companies will bias towards, hey, existing employees, can you work with an Optimus robot and get this done? Can you work with AI and get this done? Basically, you're replacing the need for labor. Longer-term unemployment may be normally closer to 10% than 3%. We might never see 3% again because of robotics. Now, while Tesla seems like it is basically the only mass manufacturer that could probably pull off mass making Optimus robots or RoboCabs outside of China, it is worth considering that there are going to be a lot of startup acquisitions for robotics, AI, probably nuclear energy or green energy, and really anything around making a human more efficient. A lot of companies like Apple, Amazon, Google, I don't know that they have their own robotics plays yet. And so I think there are a lot of startups that are going to be ripe for acquisition. If I'm right, that the next recession or soft landing will be prolonged by robotics. The Mag 7 will basically realize they must invest in robotics to keep up. Not just language learning models, actual robotics. Obviously, the language learning models could potentially be within the robots. The training that we're doing for AI will, help the vision of these robots. But that probably makes some areas of the startup and venture capital markets more desirable because you're really in an environment where some of these companies are trading for $500 million, $1 billion, or whatever in the private space. Tesla's trading for $1 trillion. You know, you're able to buy shares of some of these small companies for 1,000th the cost. Now, obviously, the risk is a lot higher, so you want to diversify your investments. Don't put all your eggs in one basket, so to speak. But you know, the potential of a 10, 20x seems to be a lot higher at some of these other smaller plays. You know, again, when I say like, oh yeah, Tesla might double, people are like, why are you so bearish? Well, really just law of large numbers. At some point, making too many Robo cabs will actually cannibalize your existing vehicle production business, where, you know, maybe you were making 3 million normal cars per year, but now you're going to go, you know, that's going to go down as your cybercabs ramp up. So you're kind of self-cannibalizing for a while, which isn't great. But longer term, if you could sustain a valuation as we have here, just from Optimus and CyberCab, and I don't even have energy in here, well, that does create some excitement. That doesn't mean the stock isn't going to go down. I think the stock's probably going to go down in the next recessionary cycle, and I think we're going to have plenty of opportunities to buy the dip on it. But I would give some words of advice. And these are, you know, a lot of these are either from lessons that I've seen other people make mistakes on, or even just mistakes I've made myself. But number one, I think this is just fair advice for everybody, and then I want to give you that Cybertruck update. Be cautious of using margin. The reason is when a stock goes down and you're exposed in margin, what you're doing is you're amplifying the risk of going bankrupt and ruining everything that you're building, whatever it is that you're building. Maybe you're not building anything. So you have to be very, very, very cautious of using margin. Ideally, you just don't use margin at all. If you are, it's for cash purposes or real estate purposes, and it's a fraction of a percent. Like the stock would have to crater, you know, 99% for you to get margin called or something. All right, so be cautious of using margin. Be patient. There will be plenty of dips enabling you to increase your allocation to Tesla. You know, I always I look at this, I go, for me, Tesla seems like something I'd really like to have around that 15 to 20% in a portfolio. Really post soft landing, post recession. You could sort of build that up during the turbulence that's coming during that time. I'm not convinced that things are going to be straight up solely because Trump is in office for Tesla. And I think that the EV tax credit still hurts Tesla. The loss of that is. But I think that a way to get there is start very small, you know, 3 to 4%, and then buy the dips. Your average cost basis might be substantially lower that way. No guarantees. So, something to think about. Oh, now what does this mean near term for the stock price? Well, it depends. A recession kills valuations for everything, and it gives you really good buying opportunities. But if this is true, that whatever next recession occurs actually accelerates the adoption of robotics, Tesla, after the next recession, will be $1,000 plus stock, over maybe even $1,500. But you might have to get through the next recession first. Now, as far as my Cybertruck, a few updates. One, it's awesome. The thing's really great. It's very enjoyable to drive. I actually find myself driving it more than I have it on autopilot just because it's fun to drive. That's probably just because it's sort of honeymoon period. And I think the car thinks it's a Model 3, but it's way bulkier, or like a Model Y. So, like, you can kind of feel when it's taking turns, it's like, okay, yeah, you don't even realize how wide you are. Like, you don't even realize your size, sir. Oh, well. So that's something to keep in mind. But otherwise, fantastic car. Really nice to have all the space. Love the little under Cybertruck, like under bed storage in the back. That's great for putting stuff. And then it not just all sloshing around in the bed. That's really functional. And the frunk is great, too. I could throw, like, my dry cleaning in the frunk. And it's, like, the perfect size, or a golf bag. It's great. Anyway, hey, If I haven't already mentioned it, I don't think I have, make sure you get your alpha report. Go to meetkevin.com/alpha. Get your alpha report every day, 15 minutes before the market opens. And folks, we'll see you in the next one. Thanks so much again. We'll see you soon. Bye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.